Good afternoon, traders. This is Christian Farmer. It's Tropic Trade Group, and this is your end of day market recap for Thursday, October 16th. A lot of volatility on the tape, a lot of volatility in the regional banks, overall banks, small caps. We'll get to all that. Before I do that, risk disclaimer in front of you. Everything that we're going through is for information purposes, only not giving out any advice or recommendations. Please read the full risk disclaimer there. By the way, thank you very much for the feedback. I got a lot of feedback from you guys about end of day videos, and I really appreciate that. Also, as I've said before, if you find these videos, end of day videos and live streams helpful, please like, retweet. I appreciate that. That helps a lot. All right, let's get into a little bit about what unfolded here. I'm going to zoom in here on the spreadsheet so that you can actually see that. Uh, there we go. Yes, so some stories out today about exposure to some areas that are getting hit in the regional bank group. I feel like we've seen this before because we have seen other bank situations or bank failures. Remember, it in 2024 it was SVB. That went down a lot because of their exposure. I believe it was to interest rates, right? The interest rates made a big move in 2024, and it caught some banks off guard. And then it was kind of a shoot first, look later situation, which happens a lot in the banks because everybody knows what happened in 2008. 2007, 2008. So people have that in the back of their mind. And the first thing that they do is they start selling the banks. Very similar. Sorry, there's a couple Oracle headlines on the tape. Very similar to what we saw then. So what is the situation this time? Well, we heard J.P. Morgan, Jamie Dimon, and his earnings call the other day mentioned that and I hate this phrase because you're hearing it all over the place. But once you see one cockroach, you see others. That's kind of the situation, and that's why people are already expecting it. So that's one of the things that you kind of think sometimes there's been some comparisons to when just last week the term that everybody was talking about was the term bubble, thinking that if the market's in a bubble or not, right? Normally when everybody starts talking about something like this, it seldom happens right away. So in my opinion, it's kind of the same thing regarding the banks. Now everybody's talking about who's got exposure to what, and and worried about bank exposure and write-offs, because Zions Bank today was the one, as well as Western Alliance, after they said that they made loans to the same borrower and had a $50 million charge off to loans underwritten by its wholly owned subsidiary California Bank and Trust. So that's a story with the banks, and they got walloped today. You could see on the spreadsheet that the KRE, the banking ETF KBE, was down 5.4%. If I don't have KRE on here, maybe I don't, but I could tell you it was down 6.2% for the day. So it's kind of what we've seen. I don't want to say it's what we've seen before. What I'm referring to is just the price action of when we do see something that's involved. I'm going to share a chart over here, and then we'll talk about the overall market here. Let me just get the right chart up here. Sorry about that. There you go. So here's the move. Yes, we noticed that this did not was making lower highs and broke through, but I just wanted to kind of remind you because everybody forgets these things. Here's what happened in 2000 and sorry, I said 2024, 2023, where we went lower, very heavy volume. The market freaked out about that for what, about a couple weeks to a couple months, and then things kind of just recovered there afterwards, right? After that one bank, and of course a lot of other banks went down too back in 2023, when they were wondering who else could possibly fail. So these things all they take time to work its way through. I remember back then I was trying to buy Schwab, and it just took too long for me. These are something that I should kind of learn from and say, hey, instead of my trading account, maybe you should have bought Schwab in your long-term account. This was the move in Schwab originally, went up a little bit and then it retested the lows all the way. I mean, we're talking about, how many months later, 6 months later, it came back and retested the lows at 48. And since then it's doubled. But That's a situation, and sometimes that's how long it could take for people to kind of get more comfortable with things. So let's go back. So that's the story with the regional banks. And by the way, like you're gonna see this a lot. If you go to the daily chart, yes, it broke the 200-day moving average. So look at the volume, by the way, in the KRE ETF. That's a lot of volume. So that's my take about that. Now, let's translate that. Now, do I think that we're going to have a major fallout in banks and financial institutions like we had in 2007 and 2008? I don't personally, but I'll still watch the price action and pay attention to that because that, like anything else, knows ahead of time. So that's important to kind of keep in mind because you're really not going to know what banks have what exposure to what. Watching the price action is going to help in these matters. Um, Also, I think with the overall market, it's just dealing with one too many situations right now. And sometimes these things, one thing could be that last thing could be kind of the straw that breaks the camel's back, so to speak. Remember, we're already dealing with a government shutdown. Couple days, a week of a government shutdown, in my opinion, not a big deal. But now that you're starting to get to over 2 weeks of this going on, you are going to have to start to piecemeal certain things are going to need to stay open. TSA agents, right? They're going to have to figure out that plan. So it gets more and more complicated. Right? They're already covering military workers. Thank goodness they're doing that. Um, but you're going to, as this prolongs, it's more and more like disruptions to the overall business and economy. So that's an issue. The more that the shutdown, the longer that it goes on for, the more it starts to affect things. And then also you're getting China headlines every other day about what's going on over there. So that is now a lot for the market. That's a bigger wall of worry than we had a week ago, and there's a lot of things that have gone up in a straight line. So we've got some digestion going on in a lot of areas of the market. Some things have gone parabolic. As I talked about in yesterday's video, uranium names, for example. And I went through a chart and talked about how I thought that these were pretty close to exhaustion. Bottom line is, for the level to watch in the S&P, we have not been able to kind of break back above the value area for the month, both in SPY and in Qs. 667.24, that's the level I mentioned yesterday. Notice how well the value areas are telling you where there's resistance. Remember, this is all pre-programmed. So it's pretty amazing because we just did not close there. Intraday, we got above, but we did not close above that all important level, significant level, 667.24. Same thing this morning too. This is where we opened, and then we drifted lower. SPY, right? So I'm sorry, cues, but also I would add, as I'm going through this chart, when you have this type of a move down, and again, I'm repeating myself here a little bit, that sometimes it really takes a while for the market to kind of uh, get get back above this. This is like a big earthquake. These are all the aftershocks of the earthquake. And that's kind of what we're dealing with now. And the market is just not ready to go higher at this point. Maybe we're waiting for earnings reports. Maybe we're waiting for something macro like the government shutdown or something with China. Remember that meeting with China is supposed to happen at the end of the month, right? Maybe the market is kind of waiting for that because the headlines are going to go back and forth until these two sit down together, meaning Trump and Xi, right? And if that meeting gets canceled, yeah, I would think that there's going to be more volatility in the market. These are big things, right? It's not so much like, the market has been able to shake off a trade war with, average countries. China's a little bit different. There's a lot of implications with China. Hence, I do think that's an important one. And I'm more worried about that one, I think, than, who has exposure to write-offs and that type of bank exposure to write-offs. But that's just my opinion, of course. 602.61 is a level that we cannot get above. Again, we tried doing this again. It's kind of frustrating with these gap ups too. I don't know why the market keeps gapping up like it does. The Qs were up a 0.5%. I have no idea why. I think it's just that there's still a lot of FOMO in this market. A lot of retail traders are still very excited about this market, which I'm going to kind of give you I'm going to keep this video short because I've got guests coming over. I'm going to get to the bottom line here. All of this, it's actually good if we get some fear in the market, right? That will set us up once we get past maybe October. I know that's a consensus thought that the end of the year is going to be strong, but I just think at this point, we've seen so many things that have gone parabolic. We need to see a little bit of a shutdown. Notice the lower high in uranium. I talked about this chart yesterday. Remember what I said, or in case you didn't see yesterday's video, but after this huge move that we've seen in uranium stocks, look at all the volume over here. Right? This tells me that something is going to be changing here in this. I don't know if it's just digestion. For now, we're just coming back to the 5-day moving average. It's not a big thing, even though this is down 4%. It's been so damn overbought. Maybe a move down here. And I think some other things like, just be mindful that, Robinhood, I said that I thought this would be a buying opportunity down here. I still think the same thing. In fact, I started a position yesterday in Robinhood. Now I'm probably a little bit early. Sometimes I'm a little bit early in stuff. Remember last week, I got long Western Digital too early in here, and it kind of made a false move below the 20 and then moved back higher. Micron had a nice day today, by the way. This is a nice break higher, maybe a little bit more conservative of a lower volatility. I don't know if I want to say lower volatility semi, but regardless, that's the name I'm watching for tomorrow.